Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello everyone, welcome to Top Stock Picks of the Week. I'm Neena Mishra. I'll do the part 1 of this video, and in part 2 you will hear from Kevin Cook. And my pick today is Shopify. It's a Canada-based e-commerce software company, and we all know that market has rebounded strongly in recent weeks, but there are clear winners and losers in this market, and one area that has done quite well is e-commerce, because millions of Americans who are stuck at home like you and me, they're shopping online for all their needs. And in fact, the market share of online sales has been rising for the past few years, but the trend has accelerated amid this crisis. And in fact, we may see a permanent shift in consumer behavior towards online shopping even after the health crisis is over. Because of this transformation in shopping habits, retailers are moving online at an incredible pace because they want to survive in the new normal. And you all know that smaller businesses, in fact, most of them do not have an online presence. So Shopify helps businesses it provides them a number of tools to digitize their operations. It's a relatively new company. It went public in 2015, and its shares are listed both on the Toronto Stock Exchange and the New York Stock Exchange. And it has more than 1 million merchants worldwide as its customers, including some big ones like Nestle and Staples, but mostly smaller ones. And its revenues include some recurring subscription fees and other fees such as payment processing fees, which basically increase with transactions. It reported excellent results for its first quarter with a 47% increase in its revenues year over year. Now, last week, it announced more services for retailers. It is building a warehouse, logistics, something like Amazon's, but of course on a much smaller scale. And more important, it announced partnerships with Facebook and Pinterest. So it will help Facebook, with Facebook, it will help businesses create Facebook shops, basically helping merchants create their online storefront for Facebook and Instagram. And for Pinterest, it will help businesses market their product into shoppable pins. So to take a look at some charts, let's go to the code page on Zacks.com. And the first chart I wanted to show you is price consensus and EPS surprise. It's a beautiful chart. The company has never missed since we started tracking the earnings estimates. I mentioned it's a new company, so we started tracking it only when we had enough number of analyst estimates. And another chart which I wanted to show you is the price chart. Oh my God. So you can see the stock has more than doubled since it bottomed in the beginning of April 2nd. So because of all those announcements that I mentioned, so don't expect it to double again in the next few weeks, but I think the long-term bullish trend for the stock remains intact. It's a Zacks rank number 2, buy ranked stock. So that's all from me today, and I'll hand it over to Kevin. Thanks.
My top pick this week, heck, this year, is Nvidia. And we're going to look at the reasons why and why it's gotten away from Wall Street. If you take a look at my relative performance chart here, I've got a few semiconductors up. Nvidia along with AMD, Intel, Lam Research, the fabrication equipment maker, and Micron, the megalodon of memory. And so, I mean, here's the coronavirus meltdown into March, and look how quickly AMD and Nvidia both recovered. And then, Nvidia has just taken off. We were buyers in the correction. We picked up some Nvidia at 215, and I was telling my people, buy some more at 200 on that dip. And regrettably, I sold some on the way up. I wish I'd bought more and hung on to all of it up to 350, where we took some profits. But Nvidia is going to be a $400 stock in the next 6 months, and you want to be a buyer, on a dip here in under 340 if you get one, and I'm sure you will at some point. So let's look at some of the reasons why. There's a few significant dates here that sort of mark what's happened with Nvidia just in the past 3 weeks. So they had their GTC conference, which is the GPU Tech Conference, May 13th, 14th. Then analysts are upgrading like crazy after that into earnings on the 22nd. So let's look at what was some of the great news we got out of the GTC Tech Conference. And I mean, Jensen Huang, the CEO of Nvidia, is always surprising us in wonderful ways. He's always got something up his sleeve. And this was no exception. Just rolling out massive hardware and software stacks for AI. Here's the new DGX A100, which is based on the new Ampere technology. I should show you that first. So you know about the Volta cards, the Tesla cards. These things have 21 billion transistors packed into the space of a shoebox, and they can run petaflops of processing power. If you don't recall, a petaflop is a quadrillion operations per second. Massive speed in these massive parallel architectures. So this is the new AI card, Ampere, the new architecture. And no joke here, NVIDIA says, scientists, researchers, and engineers, the modern day Da Vinci's and Einsteins, are working to solve the world's most important scientific, industrial, and big data challenges with AI. And who do they go to? They go to NVIDIA architecture. This NVIDIA DGX A100, I think it's got 5 Ampere boards in it. So that gives you 5 petaflops of processing power. Just incredible stuff. So that was some of the stuff we learned at GTC. And then to give you an idea of how analysts are scrambling all over themselves, so I wrote about NVIDIA earnings reported to my folks on Friday after the big news. We also own Alibaba there, and a couple of big records. Alibaba breaches 1 trillion in gross merchandise value. NVIDIA's record breach was $1 billion for the quarter in the data center realm. First time they did that. But here was some interesting news before earnings. The analyst at BMO, Bank of Montreal, comes out, raises his price target from 285 to 425, and he admits we have stayed on the sidelines long enough on Nvidia shares. And so this is the common theme. Now he says it's Nvidia stock is entering beast mode. Well, hello, tell us something we don't know. And so this is what's happened. And I'm going to explain why. Okay, Nvidia is back to being what you would call more than fairly valued, and I'm going to explain why that is after we look at a couple more things that sort of make the case. But here was, part of the BMO analyst reasoning is we don't see any reason why the company cannot grow its data center business to at least 20 billion annual run rate versus the 4.8 billion we are modeling for this year. So they just broke $1 billion in the quarter. He sees them on a run rate for almost 5 billion for the year, and he doesn't see any. Listen, this is important. He doesn't see any reason why they can't do 20 billion a year in the data center. What does that mean? That means that software and data are going to continue to keep growing massively. First of all, we're on our way to producing over 100 gigabytes of new data every day, and that's just going to keep multiplying. So what do we do with all this data? We can store it easily. It doesn't take up much space. And then software, are the brains that analyze all that. So that's your big data analytics. Well, NVIDIA is the sort of the nervous center too, with both the software and the hardware. And this is what companies want to do. This is what universities want to do. They want to take the data and mine it to the max to create new forms of knowledge, insight, artificial intelligence. All right. I'm going to go back to CES. CES is always in January. What happened at CES? NVIDIA rolled out their Isaac robotics platform. I thought this was such a big deal. That's why we were buyers of Nvidia all during the first quarter, and then love to buy it on sale in March. Well, we just found out that on the earnings call here, or in the past week, maybe since GTC, that BMW selected the Isaac platform to completely retool their factory logistics and manufacturing. And it's interesting here. BMW says their sales have doubled in the past 10 years to 2.5 million vehicles, and they're making, they've got models with 100 different options, means that 99% of customer orders are uniquely different from each other. This is why they need to be automated. And of course, they go to Nvidia for the Isaac robotics platform. What I thought was so great about Isaac is that any small company can get Isaac, and then they have, it's based on CUDA, which is the Compute Unified Device Architecture, to help them to design basically a robotics platform from the ground up with software and hardware. So just continues to be amazing stuff there. So let's talk about Nvidia's valuation. Okay, 225 billion. If they grow sales, they're going to approach 15 billion in the next 12 months. It's trading at 15 times sales again. So it's very rich. But why? Because what did we discover in the stock market here with the coronavirus crisis? We discovered that investors will pay a premium for future changing growth. In other words, software and technology that has leverage to change the future, you can once again pay 15 to 20 times sales for that and leave everything else in the dust. So that's why Nvidia is back to these valuations. I'm not saying run out today and pay 360 a share for it, although you could nibble, but you definitely want to be a buyer on pullbacks under 350. So I think I've given you all the good stuff. Oh, I just want to show you, I found this cool chart on the nanometer scale. How small are we talking about when Nvidia and Micron and others are building transistors that are 7 nanometers apart? This is a cool graph just to show you. DNA is 2.5 nanometers. A piece of hair is 100,000 nanometers. Right? There's the human hair, 100,000 nanometers. An atom of gold is, like 0.3 nanometers. So, where does 7 nanometers comes in? It comes in just, a little bit above DNA and smaller than the coronavirus. So this is the scale that they're building this advanced technology on. And so NVIDIA is creating the future. This is why you want to continue to buy it. Don't trade it. Own it for the long run. All right. Thanks for joining me.